Hey everyone, welcome to this Wednesday's release of the podcast where we're talking about Bitcoin. On today's show, I have a veteran investor and fellow Bitcoiner with Lawrence Lepard. Lawrence has been in the private equity space for multiple decades and goes by the byline, fix the money, fix the world. During our conversation, he provides an in-depth framework for why the current circumstances are a very different setup compared to anything we've seen during the past 10 years. We talk extensively about the inner plumbing and the flows of the various financial sectors. We talk about the impacts of global events that are making prices skyrocket. We talk about why Bitcoin will be so instrumental to a portfolio in this type of environment, among many other themes. So without further delay, here's my chat with the thoughtful Lawrence Lepard. I'm really excited. This conversation is long overdue, Larry. I'm really excited to have this and have it recorded. So welcome to the show.
Thank you very much. Nice to finally talk to you one-on-one.
Yeah. And I'm excited that hopefully we bump into each other in Miami here next week.
For sure. It's the plan.
So here's where I want to start off. And this was the question that I saw posted online for you specifically. And I just really like this to kind of kick off the discussion. The person asked, which market indicators are you most surprised about, concerned about, or paying attention to right now?
A great question. Very smart. So, well, a couple things. I mean, just the general stock market, and this ties into what probably is going to be one of your later questions, which is why hasn't gold taken off given all the gold-friendly stuff that's going on, or even Bitcoin? Why is Bitcoin kind of mired, down below its all-time high, given what happened in Russia? And I think what's really going on here, this reminds me a lot of 82 and 83, and I was an investor back then, which tells you my age. And it takes a while for the world to wake up. You got big investment committees, you got decisions that take time. I mean, you and I can change on a dime. I mean, we see Putin do something, we're like, oh, I know what that means. Boom, do it. But, big asset allocators, I mean, they get reports and they have a time frame and they have to have votes. And, things don't happen instantly in investment land. And to that point, it's shocking to me that probably the biggest indicator that I'm most shocked about is, given everything that's going on, it's shocking to me that the S&P is still within 5% of its all-time high, right?
Yes, sir.
We had this dip and it just came rallying back. And it just goes to show you how ingrained this buy the dip is. And it's because, it's muscle memory. It's because it's worked since 2008. I mean, there are people who are stock market investors who've never seen anything close to a bear market, and don't realize that between the peak in 2006 and the bottom in 2008, stocks lost 50% of their value. Same story in 2000. From 2000 to 2002, stocks lost 50% of their value. I don't think the world at large, many investors today don't understand that that's possible. And those were from lower levels on any way you want to measure it, right? In terms of, the value compared to earnings, the value compared to the margins, the value compared to sales, you name it. We're more overvalued now. So I'm watching the stock market very carefully, because to me, that's an indicator of the sentiment living in, quote unquote, the old world. I think our world is in the process of changing from a deflationary world that we enjoyed from 1980 to 2000, 2019, 2000. And we're slowly rounding that bottom. And we're now entering an inflationary environment, a serious inflationary environment where molecules and stuff are going to be a lot more important than paper. And so I'm watching the stock market carefully. I'm also watching the bond market carefully. And so the 10-year, as we all know, has just taken off like a rocket ship. And, mortgage rates are going up a lot, right? We've seen them go from 3% to 5% on a 30-year. And, obviously this is all because inflation's going up. And so, these are all natural things you would expect given how much inflation's gone up. But people are thinking, well, this is temporary, or it's going to turn around, not transitory. I mean, even the Fed got rid of that word. But the one that amazed me is a guy on Twitter, a great guy, does a great piece of work named Macro Elf. And he laid out the bond swaps 5 years out. People think that from 2027 to 2032, the 5-year inflation swap is at 2.5%. So that means the general people, sophisticated people who are investing in the marketplace today, think we're going to eventually get all this stuff under control and go back to a low inflation, deflationary environment. And I think that is just absolutely and completely wrong. And so it's classic investing in the rearview mirror. Let me draw in this 1982 example because I think it's useful. So I'm out of college and I work in Wall Street a couple of years and I go to business school. I'm out of business school and I'm investing money professionally. That's my job. And I remember the time playing very, very well. And everyone was saying, and we had just come out of a decade, the 70s, where bonds just got annihilated. Stocks got annihilated multiple times, kind of they were seesawing up and down. And everyone thought inflation was extremely high. Gold had gone from 35 to 800. And the consensus view in 81, 82, and 83 was inflation is going to be with us for the rest of our lives. It's a serious problem that will never go away. Inflation will never go away. And therefore, bonds are the worst investment in the world, and stocks are the second worst investment in the world. Now, it had all just changed. And, the one smart guy out there who I listened to was a guy named Gary Schilling, who was an economist way back then, and he wrote a book, and he foresaw what was coming, and he bought the 10-year strips. I don't know if you know what that is, but it's where they strip the principal off of a 10-year and actually bought the 20 and the 30-year strips as well. And he put his entire net worth into that, like in 1981. And this was when the 30-year was trading at 10 or 14% or something, right? And he made multiples of his money in the next 5, enough that he could retire. And so the point is that he caught a trend change from an inflationary environment to a deflationary environment. And stocks took off. And of course, it took a while to get going. I mean, I remember 82 and 83 was pretty choppy, for stocks. And, bonds did well in that time frame because inflation slowly started to come back down. But remember, you had an entire world thinking one way, and it took them time to shift their thought pattern. You still have an entire world thinking that Lacey Hunt is right, and he's dead ass wrong. He's completely and utterly wrong.
Yeah.
I mean, and he's talking his book, because he's made all his money off the deflation trade. And so, what's happened here is we underinvested in real productive capacity, and it's now showing up everywhere. We don't have enough things, and we got plenty of paper. Yeah. And, you're beginning to see this playing itself out. I mean, things have been doing better. Paper has been doing worse, but there's still a lot of doubt, and, it's going to take time. My opinion is, when we're very, very close to what I call the launch pad for silver and gold, which is, and then we'll get to Bitcoin in a minute, but which is when gold gets through 2,000 with authority and silver gets through 30 with authority, it's going to be game on. People are going to start to realize, okay, this is real. We've got inflation, a new all-time high in gold. That'll be meaningful. But right now, they've been able to hold it down. That's the other thing. The government obviously has their own set of interests. They know that these are the warning signals and alarms. They know that oil is a problem. And I'm sure they're out there creating paper oil and paper silver and paper gold. But at the end of the day, and probably paper natural gas if they can. But at the end of the day, paper natural gas isn't going to warm Germany, right? And so,
boy, oh boy, what a problem they got there,
right? And they got a serious problem, yeah. And it's not going to, and fertilizer that's gone up 5x. Is going to significantly increase food costs. And so, I think a lot of people are thinking, well, this inflation is bad, but it's because of COVID, or it's because of the poor, it's because of supply chain. It's all because of things, and things will go back to getting better. And all I would ask people to consider is maybe they won't get better. What if they actually get worse? I think that's a possibility. I think it's a real possibility that the market is just starting to come to grips with. So that's kind of a long-winded answer to your question, but that's kind of how I'm looking at the world right now.
And I agree with everything that you're saying. The one thing that I want to go back to, because there's a lot there that we're going to obviously talk through the rest of the episode, but the 5% off the highs on the S&P after what we've been seeing in the marketplace with the Russian invasion, the inflation prints that look like they're going double digits, I would suspect here in the coming quarter or two, and equities priced at, what would you say the equity market is priced at? 2-3% as far as the yield right now?
Right, exactly.
It's totally crazy. And you had alluded to this idea that everyone has been duped into this buy the dip mentality because it has worked. Larry, what do you think that the average participant, they've probably never even lived through a bear market? When we think about the age of a lot of these analysts on Wall Street and when they kind of came in, anybody under the age of, what would it be, 30, 35 years old has never even experienced a bear market.
Right. That's exactly right. I mean, the last 12 years, or more have been nothing but bull. And, and the other thing that I think people aren't factoring in is look at what the Fed is saying. Now we all know they're going to have to flip flop and they're going to pivot. And we'll get to that in future part of this conversation. But, any one of the things they're talking about doing would create a problem. Okay. I mean, well, first of all, the 2 10-year spread turning over, that says we're going to have a recession.
Yeah.
But secondly, more importantly, I mean, they're talking about 9 rate hikes. I mean, good God, man, look at what they did from 2015 to 2017. They had to very, very slowly creep it from 0 to 2. And that almost blew up the markets.
And,
you know what I mean?
And that was
then they're talking about,
and you didn't have any inflation to like,
exactly.
There was nothing.
Well, and they're talking about tapering, QT. They never really tapered before. All they did was let it run off.
Yeah.
And as you'll recall, when Powell said, "Yeah, it's going to be boring," and it's all this tapering, it's all on autopilot. The market quickly dove 20%, and he had to do the first pivot. So, we know a pivot's coming in the future, and that's what will lead us to hyperinflation, in my opinion. But the point is, and we also know corporate margins are falling, right? So they're going to lose, if demand is soft, they're going to lose pricing power, but labor costs are going up. We know that. We saw what happened at Deere. They got 5% gains for 5 years on wages, which is obviously below inflation. But, and we're at peak margins right now. I mean, average corporate margins, average profitability right now is 11%. It's the highest it's ever been. So, I mean, here's a perfect storm. You got the Fed tightening, you got the Fed withdrawing liquidity, you got all your corporate costs going up. You got soft demand up above, and you got peak multiples. Yeah. I mean, Husband's right. The market could go down 75% and still not be fairly valued.
Yeah.
I mean, it's insane. I mean, this whole 60-40 thing is just going to blow up in everybody's faces. It's going to be tragic. I mean,
it is going
first of all, the 40 is going to be worthless.
Yeah.
And the 60 is going to get marked down by 50% at least, in my opinion. So I mean, my hair's on fire. I'm telling you, I'm sitting here.
Well, and you say it'll get marked down 50% at least. Maybe I'm even more bearish than you in that in order for them to continue this manipulation in place, I just don't know how they're going to be able to sustain any semblance of normal price signals. And if we look at the bond market currently priced at 2.5% ish to 3%, if inflation starts blowing out double digits, we're more than 50% then maybe.
Oh, easily. And
yeah.
So then what do? I mean, the thing that gets really super interesting is trying to game theory out, moves and counter moves. I mean, it's been amazing to me the way the Fed has been bluffing, this tough guy Fed, I mean, I've got Bullard, who used to be the biggest dove, trying to be the biggest hawk, and they're saying, well, we'll go to 50 basis points. We're going to have nine increases. We could do withdrawal next month. I mean, it's interesting, though. They talk about all that stuff. And you notice when it comes down to it, I mean, like if in my view, if Powell had any balls at all, he would have said, oh, it's 50 basis points. It's 100 basis points, if he'd been serious about it. But here's the thing that they don't say that we all know. They really need this inflation. The reason they need it is that they can't deal with this debt structure unless, they get inflationary growth to make the inflation, to make the numbers such that the debt is a smaller percentage of GDP. That's key to their whole thing. So, my sense is their playbook is they're going to talk about how tough they're going to be and how they're going to get inflation under control, but they're really not going to do very much.
Yeah. Just let the market sell off. They're
going to let it. Yeah. They're going to let it go.
Yeah.
Yeah.
Wow. Okay. Let's talk a little bit about just the Russia piece here. So this is coming out next week. So we're going to know the outcome of how tomorrow kind of happens. But Putin has made the comment that they're going to pay with ruble, and if they don't like it, then he's going to shut off the power. Is this something? Is this a real threat? Is he going to actually have to flip his cards at the end of this hand and demonstrate that he actually is going to shut off the power to the EU?
I suspect he is, and I suspect he will. I mean, I don't think he's bluffing.
I agree with you.
Yeah, I mean,
I agree with you.
Look, I mean, it's hard. This is a very tricky situation to be in because I don't like the political leaders on all around the world, and Putin's one of them. And I in no way support this guy. Okay, I mean, he's an evil guy. having said that, I understand what he's doing and I understand why he's doing it. And so I look at it from an analytical point of view, not a judgmental point of view. And I think that he is in a situation where he knows he's got the bullwhip and he's got what the world needs. He's got commodities. And he was very strategic in the way he let us get way out over our skis with all this leverage. And now he's saying, fine, you want my stuff that you need? That's great. You can pay me in something that's real because, in my opinion, what he's doing now is like what de Gaulle did in 71. And that's why to me, this is an enormous monetary earthquake. I mean, I thought gold and silver were going to work and Bitcoin were going to work beautifully long before Putin did any of this stuff.
Yeah.
To me, what just happened, I was like, I fell out of my chair. I was just like, this is a major, major accelerant to the trends that already exist. And then when the U.S. reacted, when Trudeau reacted to the truckers, and then the U.S. reacted to Russia by freezing stuff, I mean, that's like an advertisement for Bitcoin and gold, right?
Yes.
I mean, the authorities can grab your money, Well,
I think the FX reserve piece was, I was talking, I think to Luke Groman the day that happened. And I know when we stopped recording, we were just like, I can't believe this just happened. Like this is.
Yeah, me too. Yeah, I had the same reaction. I mean, it's like, what happened to the rule of law? You know what I mean? I mean, it's, and of course we're demonizing this guy, but it's like, okay, but what we just did, is that correct as well? Whatever. Let's not get into the what's right and what's wrong. Let's just look at what's happening. The fact of the matter is, he is saying, I'm not going to take this paper in exchange for my real stuff. And we are trying to demonize him. And, I think the U.S. strategy has been, well, let's see if we can piss off all his oligarchs and maybe they'll knock him off. But my sense is that he's pretty well defended, and that's not going to happen. And he's going to be able to carry through on this thing. And, I'm guessing the way I read it, if he doesn't get payment from Germany in the form of rubles, he's not going to ship the gas. They're going to turn the pipeline off.
So what happens then? Because I'm with you. I think that's the highest probable outcome here is that they don't pay, he shuts off the gas, and then what?
Well, they go into some form of rationing. Gas prices go up even higher. Fertilizer prices go up even higher. I think that, he can sit there. He doesn't need to sell that gas. Whereas the Western world is highly leveraged with a lot of paper, a lot of derivatives, a lot of stuff, that it's all linked together. And when you pull out the actual physical piece, the physical collateral, the paper stuff doesn't work anymore. And so, we've already seen, you've seen Trafigura and some of these big commodity houses have had serious problems. I mean, we saw what happened with nickel, right? The nickel blowout, that basically just revealed the LME to be a complete farce.
Yes.
Right. And something very similar, by the way, could happen with silver and gold. I think it might. I can't predict it and I can't guarantee it.
Yeah.
But the point is that we've got this enormous paper structure built on these underlying things. And if you stop the flow of the underlying things like he's doing, everybody looks around at the paper and says, what's this paper worth if it's not connected to something?
Yeah.
My counterparty is going to fail. And so this is, you had the same thing in 2008, but the paper was all built on the houses and it was the banks and it was at a lower level and the Fed could step in and say, okay, no problem. We're going to make all these guys money good, with fake money. And
well, so you didn't have this strategic situation kind of playing out.
Russia wasn't involved. Right. Yeah. Right. So, so here, look, it's a big mess and it is going to, in my view, get worse because I don't think this guy is going to back down. I think he understands the vulnerabilities. There's a lot of data that says he understands how fractional reserve the gold market is. And it's interesting, the choice, the ruble price he chose for gold was perfectly calculated to match today's price. And so he's basically backing the ruble with gold. He's not exchanging. You can't take the ruble and get gold out of his vault. So it's not full exchangeable standard. But in a piece, by being able to, by setting the prices the way he has, he's taking, people to a gold standard because he's forcing other people who want his resources to pay in something that's real. And that's huge. And it's going to be, the West is going to find that there's not as much stuff out there as we thought. And we've underinvested. We've invested in the wrong things and we've underinvested in the right things. And so the price of everything is about to get a lot higher. And, I'm shocked. I'm sure you've seen this. I think on Twitter yesterday, I saw some $7, $8 for gasoline in California.
Yeah.
I mean, how long? I mean, and so you look at the stock market's within 5% of its record high, and you've got $7 gasoline. I mean, I'm like,
sense.
Like my head is spinning. I mean, how is that possible?
Yeah.
I mean, it's just, it makes no sense. And the reason is the stock market guys are doing a Tina. They're doing, well, there is no alternative and there's lots of liquidity and, we can lever it up and it's worked so far. But you know it, I know it. This is going to end badly for bond bulls and stock bulls. And it's going to end better for commodity people.
I think your comment about the nickel, when they stopped the exchange and then they rolled back trades that happened that entire day, is truly a precursor for what's to come, I think, for maybe the rest of this year or even the year after.
Absolutely. I mean, Twitter had it right. I mean, the house doesn't like to lose, right? I mean, they did this to the Hunts. I mean, and this is something for all Bitcoiners, gold people, silver people. We've all got to be aware of this. They are going to change the rules.
Yeah.
Okay. I saw this firsthand. I was massively short the financials in September of 2008. They outlawed selling the financials in September. I lost 5,000 basis points, in 3 weeks. And my fund went from having I had the Michael Burry trade on, but I didn't know what CDS was. And my fund was up 50%, and I ended the year down 6%.
Wow.
Because they changed the rules. Because they changed the rules, right? I mean, the Hunt brothers had them beat. They had them cornered. There wasn't enough silver. And they changed the rules. I mean, whoever was long those nickel contracts, they had it. I mean, but look they did it with GameStop. They did it, they do this over and over again. So the difference with Russia is they can't change the rules if you need the physical stuff.
Yes.
I mean, right? I mean, you either have the oil and gas, or you don't. And, the paper is irrelevant, right?
Well, so people from the Bitcoin space that are listening to this, they hear you say that they're just going to change the rules on you. How do you think that they could do that with respect to Bitcoin?
Well, fortunately, it's quite a ways down the road, and they're going to have a hard time. We've got some senators in favor, et cetera. They're going to have a hard time coming after it that way. But having said that, as things get more and more desperate, you don't know where they'll go. I think they're going to do one. Well, there are a couple of things I predict. First of all, when you if you have foreign money overseas, if you're an American and you have an overseas bank account with more than $10,000, you have to report it, right? A lot of people don't know that, but you do. You send a form to Detroit every year. I do it because I have some accounts in Switzerland with gold in them. And they do that. They did that to try and crack down on tax evaders, right? My suspicion is that something very similar will be coming for Bitcoin. They'll say, okay, you've got to report your Bitcoin addresses, and you got to tell us how many coins you have, because this is a tax evasion scheme. We don't like it. You got to do it. And at that point, every Bitcoiner in this country is going to face some difficult decisions, right? Do you want to just have the 12 words? What do you want to report? What don't you want to report? Whatever. We're not going to go there. But the point is, that's an issue. So I could see them coming for that. I could also see them coming for, windfall capital gains taxes on gold, silver, and Bitcoin holders. But again, the advantage of these assets is that they are bearer assets.
Yes.
And maybe maybe you can hang on long enough to the point where this regime fails. I mean, in France, in the French Revolution of 1789, the assignat failed. Okay, and basically the government at the time was very anti-gold, and they knew everyone hoarded gold because they knew the paper was failing, and so they said, you got to report your gold, you got to turn in your gold. Of course, nobody did, or a lot of people didn't, and they found people who had hidden gold or had not reported their gold, and they guillotined them. Okay, so I mean, governments can be brutal with respect to people that they think are, behaving outside their interests. And you could certainly see a scenario where they say, we had this great, fiat money scheme going. Well, they wouldn't say that, but we have this great economy growing. We have this great system going. And you sound money people, you totally trashed it for us. You're anti-American. You've ruined our system. We need to tax you. We need to know what you hold,
And you're already seeing some Wall Streeters saying these things about our community. I mean, Mike Green's a perfect example where he was saying, y'all are un-American. And at that point, I was like, I disagree with you, and I don't really want to hear your opinion anymore.
I have no time for that guy.
I don't buy into this idea of either you believe in free and open markets, right? And that the best, if I want to go out there and I want to buy something that you think is worthless, if you actually believe in free and open markets, you should promote the person to do that, because then they're going to have less buying power and less influence into the direction of where everything goes, right? To imply something like that, to me, is such a fundamental flaw of what this country stands for, which is free and open markets and just capitalism, right? And freedom.
Yeah, completely agree. I mean, at some fundamental level, you have to decide, who is more sovereign, the individual or the state. And, statists believe that they have a right to tell you how to live their life, live your life.
Yeah.
And I don't believe that. And I don't believe that's what the Constitution says. I don't believe that's what the majority of Americans believe. And so I am very anti-statist. But there are people who are statists who, they use all kinds of different mechanisms to try and, control people. I mean, and this has been going on for years. I mean, all these wars are driven by statists, and all these wars are financed by fiat money. If we had sound money, we wouldn't have these wars. You know that. I know that. Bitcoiners know that. Gold people know that. And the statists know it too. And that's why we're their enemy, because their system rewards them and punishes us. And what it really does is it doesn't just punish us, but it punishes the average working people who are unable to save their labor, and therefore basically get in a situation where they can't even retire because they never know if their money is going to last.
One of the glimmering hopes that I see in government is at the state level relative to the federal level. So let's just pull the thread, and let's say at the federal level that it becomes politically popular to do some of these things that you're talking about that have been demonstrated throughout history. It appears like states like Wyoming, Texas, and a few others have already started passing some type of protective measures for self-custody. And I guess I'm hopeful that competitive dynamic that exists here in the United States between the rights of state powers versus at the federal level will really kind of kick into gear and protect the interests of people that are local into some of these jurisdictions that have demonstrated a strong resolve for protecting self-custody. What are your thoughts on some of that?
Well, I think that's right. And there could be a secession of several states. I mean, obviously Florida and Texas are the two most likely candidates. And yeah, I mean, it's I'm in favor of that. I mean, the federal government, what do they do, really? I mean, they conduct wars and they redistribute income. I mean, those are the two biggest line items in their budget. And, if Texas or Florida were to say, sorry, we'll opt out, we'll send you our share of the military budget for national defense, and we'll opt out all that other stuff, it would be quite a challenge. I don't think we're going to fight another civil war. But to me, it's interesting that there are big pieces of this country, and hopeful that there are big pieces of this country that understand just how broken the political system and how broken the federal system is. My personal view is that the way this is going to go down is before that happens with the states falling off. People, one of the questions you put up a thread, so what are questions you want to ask Larry? I think we're going to have hyperinflation, Preston. I really do. I don't like saying that. I know others believe it but don't say it. Well, I'll say it. I think it's going to happen. Yeah. And I think when the currency fails, just because mathematically it's kind of baked in, and historically it's the pattern that happens when we see what's going on now happens. I don't know the time frame. It could be 2 years. It could be 8 years. But it's somewhere in that window. And when the currency outright fails, when it will not spend, when everyone has given up on it, well, that'll lead to all the politicians being thrown out, everyone being very angry, a lot of suffering and pain all around for all of us. It'd be horrible. And yet, I believe there's a remnant of smart people in this country and others that will say, the reason this occurred to us is that the government was broken and we got to reform it. We got to fix it. So we'll get, Mayor Suarez will become President Suarez. And, we'll go to a Bitcoin standard or a gold standard, and we'll have term limits, and we'll, try all the criminals who put us into this mess. And, there'll be a better system coming out the other side. That's, to me, that's the task of Marty Bent's generation in this fourth turning. Yeah. I mean, Marty and Jack Mallers are going to be the leaders of the hero generation. They're going to lead us to the other side when this collapse occurs. And to me, it's pretty inevitable that it's going to occur. I mean, I think fiat's going to be worthless and not that far away.
Yeah, I'm with you. I think that what we see playing out and people ask me this, they're like, well, how do you have so much conviction in that idea? And I'm saying it's not necessarily that Bitcoin is gonna like pull it there. I think it's more that the existing system and the macro backdrop, especially in fixed income, is so incredibly broke that it's going to push and force this. It's going to thrust it upon us. Yeah.
Absolutely. It's just, I mean, it's math. It's just math, guys. It's just so simple. You can't increase the debt load faster percentage wise than you increase the productivity without having, it has to implode. It just, by definition, it has to, because we have to continually print more and more money. And so to me, the next big thing that's going to happen is we're going to have the next Powell pivot. And I don't know when that happens. I can't predict. Nobody does. But given what they're doing and given how fast things are moving, my suspicion is it's probably not going to be that far out, because the Fed now has 3 mandates, right? They always had the mandate of full employment and controlling inflation, but the third mandate really is continuous markets. And so, as we were talking about earlier in this conversation, what happens when the bond market starts to break? And everybody, look, the 10-year in and of itself is absolutely ridiculous.
We're getting there.
You got, it's already broken. But I'm talking about really breaking. You got 8% inflation and you're getting a 2-point-something% yield, right?
Yeah.
That doesn't make any sense. So pretty soon, the entire bond market is going to say, sold to you, Fed. And, if rates, and so as people sell out of the 10-year, which they've been doing substantially, and it goes much, much higher, it just starts shutting off everything. And, then the government says, well, okay, and they can't sell their bonds. And so they have to continue to buy them themselves. And, what's standing between us and hyperinflation right now is just lack of awareness by enough people. And in Gresham's law, and I've said this many times, read Reinhardt and Rogoff, read all the hyperinflation books. What you come to understand is that hyperinflation it's money velocity based on people dumping the money. And people dump the money when they come to the conclusion, this is Gresham's law, they come to the conclusion, there's absolutely no way the government can stop printing. And some of us already know that. I believe that, you believe that, others Bitcoiners generally believe that. Most of America doesn't still believe it. They're probably worried about it. They're starting to be worried about it, but they don't believe it. But once they come to believe it, they're going to want out of every single dollar they've got. Yeah, they're going to sell every single bond they've got. They're going to sell a lot of the stocks they've got, and they're going to move into real things. And they're going to see the price of real things going up really fast. And that's how hyperinflation happens. It's an abandonment of the currency because the stewards of the currency have so abused it, and there's no way they can bring back the confidence. Volcker did it. We had a mini version of this, obviously, in the 70s. Gold went from 35 to 800, and it did it when inflation was high in the teens and so forth. But, we weren't as indebted, and Volcker was able to step in with a 20% interest rate and bring back confidence. If we had a 20% interest rate today, the entire country would go bankrupt. There's no way, right?
Immediately.
Immediately. It looked like the Great Depression. And actually, one of the great questions on your thread was, for me was, well, are we going to have hyperinflation or deflation? And the answer is both. It's, but it's just not clear in what order, because, the inflation is going to be so messy that activity is going to collapse, and that's going to lead to deflation. I think sadly what's going to probably happen is we're going to have, deflation in assets, everything you own, and we're going to have inflation in everything you need to stay alive. So, which is why, another question was, is housing a good store of value? Yes, it is if you don't lose it, because it's got practical utility. The thing that's wrong with it is the government can tax it, but at least it's a place you can live. And, if your income is solid and, you're not too levered on it. In some places it makes sense. You get a 30-year, there was a time when you get a 30-year mortgage for 3%. You're putting on a Hugo Stennis trade by levering yourself up to buy something you needed, right? Which is why, I think that housing was up 20% last year. Isn't it amazing? Housing prices are up more in this cycle than they were in the 2008 housing bubble.
Yeah.
It's, to me, that's just people realizing that this is an asset that's real. And so it's Gresham's law for housing.
Larry, I got a question for you. You had mentioned that getting the timing of the Powell pivot is something that you can't forecast. When I'm looking at the bond yield curve and I'm looking at the last 40 years of this downtrend on the yields that we've seen, they seem to hit like this mechanical stop that is very predictable when you look at all the different durations, and they all kind of hit a different yield depending on which duration you're looking at. And when I'm looking at this, just as an example, like the 30-year right now is suggesting that once we get to around 2.87, we start to hit that 40-year trend line on the 30-year. And today it's at we'll call it 2.5%. So we're like dangerously close to this limit that we've seen for 40 years, at least on the 30-year. You go to the 10-year, I think we're already there. And so you had mentioned that you think we're getting dangerously close to whatever that limit is for the Powell pivot. Do you think that this is a good way to kind of, if a person was trying to estimate on when that's going to happen, or like how much is left before things dangerously start to fall apart in the fixed income market, is this a tool that you think you could rely on? Is there anything else?
No, it's a great tool. Well, yeah, I mean, I think, yes, that's probably the primary tool. The things I'm watching that. I'm watching the stock market, because as the stock market starts to sell off, there's negative wealth effect and so on and so forth. I'm watching the price of Bitcoin, and I'm watching the price of gold and silver. I mean, to me, those really are your dashboard for what's going on here. And everybody else is watching them too. And this is the common knowledge game that we're playing, right? So, if the bond market really starts to fall apart, I mean, recall that I mean, we had a preview of it, frankly. It's a good preview. So in March of 2020, COVID hit, right? And stock market, big exogenous shock. Stock market, boom, just took in a huge dive. But the really interesting clue there is what normally happens, stock market takes a dive, bond market should have been well bid, right? People should have said, okay, great, stocks are cratering. Oh yeah, I'm running into bonds. Bonds should have rallied like crazy. Well, they did initially. And then they started to sell off, right? And it was kind of like, and eventually, as Groman points out, eventually there was no bid in the bond market. Well, that scared the Fed. You can see it. It's in their minutes. And so, that's when Powell came in and did his Draghi and said, okay, whatever it takes. And that's how we printed $4 trillion worth of money, in a couple of years, which was basically all the QEs from 2008 to 2013. We did it all in 2 years. So it's the Hemingway, bankrupt, how'd you do it? Well, two ways, gradually, then suddenly. Watch the acceleration, watch the second derivative, right? I mean, if we see serious acceleration in the sell-off in the bond market and rates going up, we see serious acceleration in stocks, we see serious acceleration in gold, silver, or Bitcoin, you'll know it's happening. That's, to me, those are the clues. And we've seen all of those. I mean, we saw, just recently, we got a pretty serious, the Russia thing hit, we got a pretty serious acceleration in gold. But then they kind of got it under control. Yeah, nickel blew up, but they put that back in the can, and, they got everything under control. And gold's come back off of down below 2,000, came back and tested, low 1900s. I mean, so you get these, it's like waves. You get a wave and then it'll stop, and you'll get a retrace, but not all the way back. I mean, gold's not back in the 1800s, the 1700s, right? I mean, Bitcoin, same thing. When Bitcoin was in the high 69 area, and okay, it slowed down. It run awfully hard, right? I mean, everyone who was in it at 5 or 10,000 was feeling pretty good at 69. I recall it. They were all telling me I was an absolute idiot for owning gold. and I mean, look, I get it, and then it backed off to 30, everyone's there's a lot more silence, kind of like, oh, okay. Yeah. So to me, these are the indicators, right? Because they are the most liquid, most watched signposts. And you can bet that when Bitcoin did that, alarm bells were going off in Washington, D.C. and at the Fed. I mean, they had, right? I mean, in the Exchange Stabilization Fund, just as when gold takes out 2,000 the next time, which I think it will within a month or two here, it's gonna squirt on up to 2,500 or 3,000. It's gonna be game on, and these stocks are gonna go berserk, and everybody's gonna go, what's going on here? And it's going to be because of the obvious inflation and more people coming to realize. I mean, I think I've said this many, many times, but it's just substitution. I mean, you've got 350 trillion of financial assets. You've got 7 trillion of sound money assets. All that 350 trillion has to do with some piece of that has to say, hey, I'm not holding my purchasing power. Give me some of that sound money stuff. And so even if it's only 10%, that's 35 trillion fiat assets chasing 7 trillion of gold, silver, Bitcoin, and gold stocks. I mean, it's, what's going to happen? The 7's going to get bigger. That's just going to happen. I mean, that's a fact. And so, people have asked for my targets on this stuff. I mean, I think this year we'll see gold at 3,000. I think this year we'll probably see Bitcoin at 150. I think this year we'll probably see silver at 50. in the next wave up. And if the pivot comes, and that's even before the pivot.
So Larry, I think, when you say pivot, are you saying yield curve control is basically what's going to have to happen for them to get things under control, or what do you think that pivot looks like?
I'm saying yes, yield curve control would be one form of the pivot, because they have to spend, they have to grow their balance sheet to do that. They've claimed they're going to shrink their balance sheet. Yeah, yield curve control. Any reversal of this tough guy Fed talk that we've heard. But here's my sense, Preston, this is important. A lot of people are like, well, they're going to roll over right away. I don't think so. I think they know. I think they're aware of how much fire they're dealing with here. I actually think they're going to let Joe Wang on Twitter does a good job of this. I think they're going to let the stock market go down 20 or 30%. I mean, I think, and I think the reason they're going to do it is they kind of need to do it to create demand destruction, to have a chance of getting oil and all this energy inflation back in the can. So, my sense is,
the previous sell-offs, I'm sorry to interrupt you, the previous sell-offs that we've seen that have been pretty sizable in the last, if you even want to call them this, in the last decade, have been around that point that you just said, that percentage drop. I know the March, we were down 30% in March on the NASDAQ at least.
Right.
So when I chart that out from the high that we've seen in the NASDAQ, it's pretty much right where you're saying, another 25% from here before they're going to step in and do anything.
Right.
And it seems like that's their trigger, that things, if they let it go any more than that, it's going to really get disgusting and maybe difficult to even calm the markets.
I think that's exactly right. I think they know that's the point at which people really start to freak out, and they got no chance of bringing it back. And so, as much as, and they'll probably have some excuse for it. It'll be, it's interesting to me the way
Russia,
right? They blame, it's Russia, right? Yeah, it's not our fault. We had to do this. This is the only natural thing to do. And they'll do, they've already started doing this, right? The gasoline prices are high in California. Pelosi says we should start sending checks to people as rebates. Other countries have talked about that too.
Yeah.
So, where's that money going to come from? Well, we're going to print it. So, look, there will be, and people will be screaming, bloody murder in terms of gas prices and food prices. There's an election coming up. So, one thing I'm sure of, my guess is before the election comes up, Biden's going to forgive all the student debt, right? He'll just waive that.
That's an interesting call. And I think you might be onto something there, because they're going to have to do something pretty miraculous in order to turn the tide here, based on the numbers that I'm seeing.
Well, he's got 40% approval rating. It's going to get lower. Look, you would not want to be a politician in this country, anywhere really in the world in the next year. There are going to be a lot of really righteously pissed off people. I get it. Mm-hmm. And they're going to take it out, I hope, on all the incumbents, because frankly, they all stink, and then hopefully, over time, probably not this cycle, but a few cycles out, we actually start getting some sound money incumbent, or sound money candidates, who are like, look, you hate the inflation we're living with. We do too. Here's how you solve it. You do a monetary restructuring, and that would be a lot not easier, but it would be a fairer way of solving this problem rather than letting it go to its end conclusion of runaway inflation.
So here's my issue. I think you already know my issue with gold, right? I don't have an issue with gold on an individual level. Like if an individual investor wants to own it, hold it to preserve buying power, like I have absolutely no issue with that. Where I get frustrated with gold is on a sovereign level, in that you're going to have governments that, through branding and marketing, suggest that they've got a peg, when in reality, you can go back and look at it, even in this country from the 1940s until we came off the gold standard. Did we really have a peg, or did we have a peg in branding and marketing? Because we were adjusting the money multiplier. I've got charts that kind of show how we were adjusting that money multiplier based on what they had in the vaults, right? And so, although it briefed well, in practicality, like any other gold standard, it failed because they were manipulating the ledger, and they were manipulating the amount of currency that was riding on top of the amount of gold that was in the vaults. So where I get a little bit frustrated with, and you would see this, I think Russia's a perfect example. They're threatening, or I don't know, you call it a threat. They're saying that they're going to start backing their currency with gold, or that they're going to accept gold for their oil sales, and that it's becoming sound money. But in order to actually truly run a peg, you have to be willing to sell the gold in the vault at a certain price in order to peg the currency.
Yeah.
I think, and this is, this is me, when I'm looking at the competitive landscape that we've got happening around the globe to engineer growth through debasement, you're in this ultimate rat race of like 100-meter sprint where the only way you can possibly win is by cheating better than the person standing next to you. Right? So thinking that any one of these nation states are somehow going to just, oh yeah, we are going to actually run this race by the rules, fully knowing that nobody else here running the race is going to obey the rules. I just don't see it happening. I don't see it happening based on the demand by the populace for manipulation of currency and debasement. The free college, you name it, right? The populace wants this as of right now. That's about to change, like you've so eloquently highlighted. Like there's going to be a call for the exact flippening of that. But I think right now, to think that anybody could go along with this for sound money policies at a time where the cheating is the only way you can possibly stay in the race, I just don't know how it's possibly going to work.
Yeah, well, I agree with you there. I mean, I don't disagree with any of that, and there's no doubt that the great flaw of the gold model is that it's not verifiable and it's hard to move and you can cheat on it and everything else. I mean, it's failed. I mean, the gold standard has failed at a sovereign level. Yeah, at a sovereign level. Until Bitcoin was invented, it was the best the best of all alternatives. It was the least worst alternative. And now Bitcoin's a better alternative, because of the way it's structured. But yeah, I mean, it's still relevant though. And, some people have asked the question of, how do I see it unfolding, and will gold have, any monetary value in 10 years? And look, time, it takes time for people to change perceptions. And you got, 5,000 years of Lindy effect on gold. And you got, I don't know, what is it, 12, 13 years or more, on Bitcoin. And so gold's not going away. I'm completely where Saylor is, that Bitcoin's a superior form of gold, or of sound money. But I differ with him in the sense that I don't think gold is Bitcoin's enemy. I think that there's a transition period that's going to occur between the two, and they're both sound money with slightly different characteristics. And so I foresee. I mean, Bitcoin is clearly the faster horse in the race and the better of the two, and probably where we'll end up in 20 years in terms of base money, which we need. We need a neutral reserve currency. I mean, I don't think most people in the world even have a clue of what Triffin's dilemma is. But at top monetary circles, they understand what it is. And so we will go to a neutral reserve currency, I think, out of this fourth turning, because what will happen is these will be so awfully broken and people will have suffered so much that somebody smart will get in there and say, this is the solution. And I pray that solution is ultimately Bitcoin. I think it probably will be. But I also think that there's a chance that between here and there, you've got 3 nuclear powers in the world, 3 big nuclear powers, you get more, but Russia, China, and ourselves, and 2 of them are betting pretty heavily on gold. And we could leapfrog them if we bet on Bitcoin. I think we should. And hopefully that's what Jason Lowery is able to convince the Pentagon of. But, it's a tricky issue, and I wrestle with it every day. I mean, on my personal account, my PA, I'm much more heavily Bitcoin than gold, but I also manage a gold fund, a gold stock fund. And, a lot of my investors are boomers that want nothing to do with Bitcoin. And, I've got 20% of my fund in Bitcoin, and they've seen the performance and they like that, but they don't want to give up on the gold. And I understand why. This is a new technology that they view as not being widely accepted and having risk. I think that's falling away. I've said in the past, I went to the gold show and I gave a speech on why all gold people need to own Bitcoin, and the speech is available. It's out on the web. And, this was a gold show with a lot of older people who've owned gold for a long time, been very frustrated. And somebody asked the question, said, how many of you guys own Bitcoin? Half the hands went up. I thought that was impressive. Your gold holder is your best Bitcoin convert. They understand the monetary issue. Yeah. They just need to understand what, digital immutability is. But Bitcoin's not Doge, right? I mean, it's completely different. And it's not XRP, it's the real deal. And so once they come to understand that, most of them eventually embrace it and start transitioning over, and like me, become more and more, into it as time goes by. So, but how this whole thing unfolds, none of us know, right? I mean, there's a lot of politics involved. I think that what I can say with confidence, what I believe anyway, is that for individuals and families, if you want to carry your savings and wealth through for your kids, grandkids, and your family, your next generations, your best places to be are in this order, Bitcoin, silver, gold, or maybe gold, silver. Silver is more volatile, but and somebody asked a question on the thread, if you had 100,000, how would you allocate it? I'd probably put the average person, I'd probably put them a third into each of those three things. I know there are people who say, well, you should go 100% Bitcoin. Well, whatever. Look, they're all going to maintain value, over time.
I think a really important thing that's missed, especially with the few characters that you have on Twitter, is age when you're doing portfolio construction, and you're also considering, well, what lifestyle is this person trying to preserve at that particular point in their life, or if you're dealing with a young person, right? How much is this person trying to grow, and how much risk tolerance are they willing to take based on how much more time they have to catch up if they're wrong? And these are nuances that are vital to portfolio construction. Right?
Absolutely.
No one ever addresses.
Yeah, absolutely. And I'll add to that volatility, which you alluded to with the risk point of view. Look, people in the Bitcoin space can handle a 30% drawdown, a 50% drawdown, even an 80% drawdown, because we know what it is. We believe in long term. We know it's going to win. They're going to be worth millions of dollars per coin, full stop. So we're good. But, if I take my 80-year-old mother and put her into Bitcoin, and she's looking at the statements every month, right? And I put all her net worth into Bitcoin, and she, her net worth gets drawn down by 50%, she is going to freak out.
Yeah.
She is going to completely and totally freak out. And she just can't handle that. So, as you point out, everybody has a different risk tolerance. There are different points in their life. And, gold has never had an 80% drawdown. It just hasn't, so. And yet they all represent sound money in today's world.
Here's a question I loved. I don't think you're prepared for this one.
Okay.
When will Clown World peak?
Yeah, so I love that question too. I think Clown World will peak when it gets very serious and real. You know what I mean? And I'm sad to have to say that, but I think let's look at a prior example. Let's say the roaring 20s, when everyone was, drinking like crazy and partying, and the good times were roaring, and the stock market was going up. And, I remember my grandfather had a business, and he levered it up, and he almost lost it because of that leverage. And, that was kind of happy times Clown World. And it's maybe similar to what we've lived through here with this bull market. Okay. And then the Depression hit. And he was struggling to survive, and so was everybody else. They were just trying to feed themselves. And then, there are people who in the Midwest who live by, I've read stories of they literally lived by the fact that they had a gun. They were able to shoot squirrels and possums, and that's how they got their food, right? And then a war broke out, and it was an existential war. It was for all the marbles. You had a bunch of evil powers that wanted to take over the world, and we had to go overseas and slay them. The people who did that, those were serious people. That was the greatest generation. Those were very serious people who addressed a very serious issue. And there weren't any clowns left. And after that, we had a pretty stable world in the 50s and 60s. It didn't feel stable to them because they were worried about the Cold War and a lot of other things. But there was a lot of good going on, before they decided to assassinate a president and start a war. But I guess my point is, I think that when times get tough, and sadly, I think they're about to get really tough, that Clown World's going to go away. Mm-hmm. NFTs aren't going to have any value. We're going to go back to some fundamental values. Who do you know? Who can you trust? What do you value? Family and friends. What really counts, and what do you produce? Not what do you lie about or say you've got, or how much paper can you shuffle, but what can you actually do? Are you a doctor? Can you heal people? Whatever it might be. Are you an oil field worker? Can you help, get oil out of the ground? Are you a farmer? Can you produce food? People who do real stuff have been terribly left behind and undercompensated in this 40-year finance bubble.
Amen to that, sir. Amen
right?
to that.
Right? It's tragic. It's just tragic. Look at the way that Midwest was hollowed out.
Yes.
Then you had the Sacklers come in, and mess them all up with all those drugs and kill all those people. I mean, what's
Yes.
happened to this country is absolutely tragic. And yet there are enough people around. There's enough of a remnant around who remembers what it used to be like, because we grew up in the good times and we knew we had grandparents who fought in those wars, and and uncles and aunts, and we believed in the fundamental goodness of this country. And it is a great country with great people. And even though it's gone very much astray, tough times. And Marty and Jack's generation, they're going to step up.
Yeah.
They're going to step up and go, you guys F this up, and we know how to fix it. And here's what we do. We go back to sound money. We reward the right things. We get the money out of politics. We put in term limits. We go back to what the founding principle, we investigate the CIA. Maybe we shut it down. We go back to the principles this country was founded on. And and therefore our grandkids will live much better lives. And there's a lot of good out there. There's been so much in the way of technical advances that are fabulous.
Yeah.
But and there's a lot of good out there. I mean, if we can just stop from blowing ourselves up. I mean, that's my greatest fear, is just that even in this little thing. I mean, this little Ukrainian thing reminds me very much of World War I and how they stumbled into that.
Yes.
And I mean, so I mean, insulting, I mean, sitting there and having schoolboy bully fights with each other. I mean, the way Putin talks to Biden and the way Biden talks to Putin, I mean, it's ridiculous. I mean, these guys have nuclear weapons, in their hands. Who knows if somebody makes a misstep, right? I mean, to me, it's a very dangerous thing that's going on, and they need to calm the war side of this down. If they want to fight it at an economic level, great. Let's fight it out over money and sound money and resources. Okay. That's a fight. I mean, if we get back to a neutral monetary standard, Luke, I'm sure in your conversation with him pointed this out. If we get back to a neutral monetary standard, U.S. industry will grow. I mean, Intel's putting a plant into Ohio. I mean, we will come back. I mean, the mistakes we made will get solved with a sound monetary standard, but they won't get solved until we get there. And sadly, I don't think our leaders today aren't smart enough to take us there without having this blow up. And it's going to blow up. I mean, I that's one thing I really strongly believe in my bones. It is going to blow up, and soon. I mean, certainly within 10 years and probably within 5. So, and that's sad. I'm not happy to say that, but what I'm good at, what I've been paid to do, is analyze stuff. And I've looked at historically the patterns, and that strikes me that that's the pattern. It's going to blow up.
Larry, the last time we had this shock to the stock market, you and I both agree. We think that this is coming pretty soon. The NASDAQ was down about 30% through that March 2020 sell-off.
Right.
That same period of time, gold was down. It wasn't down a lot. Bitcoin was down 60% through this sell-off with equities. Now, it had a substantial recovery, very quick,
came back fast,
quick recovery. Do we see something similar to that on this go around?
You could with each cycle, people get smarter. So it's different every time. I mean, Bitcoin has had several 80% drawdowns. I mean, but I think there's more and more people who are realizing that it's a safe harbor. And I actually feel the same way with gold. In 2008, gold sold off hard. I mean, look, in a liquidity crunch, correlations go to 1 and everything goes down. Everyone's just scrambling for cash.
Yeah.
Right, to stay alive. So you don't sell what you want to sell, you sell what you can sell, right? What you have to sell.
Yes.
Right. I mean, I actually had a bunch of silver ounces that I had put at a depository and levered them up. And I, in March of 2020, I got a call that basically said, you got to come up with X $1,000. It was a big number. It was like, almost it was a big 6-figure number, in 3 days, or else, we're going to force sell your silver at $12 an ounce. And it kind of was a lesson for me about leverage, right? And, that's why I've often said on Bitcoin holders, other holders, be careful not to be leveraged.
Yeah.
Right? I mean, you got to know what you own. You got to know why you own it. And you got to be prepared. And it's the same with houses. I mean, people go, well, okay, I'm going to do the stimulus trade. I'm going to buy this house because they're going up and I know it's going to work and blah, blah, blah. I'm going to get a mortgage. Well, okay, you do all that. We have a depression. You lose your job. Your house in value is inflated. You can't make the mortgage payments, you're going to lose the house.
Yeah.
So, it's to answer your question, I don't think we will have that deep a drawdown in silver, gold, or Bitcoin this time around, because I think a large percentage of the people have become aware of the issue. And the issue is the monetary, debasement. And these are your safe havens. In fact, I've seen more and more things where if the stock market, we've seen days where the stock market will be weak, the bond market will be weak, and the gold share market will be strong, which is very interesting to me. You're starting to see, these correlations break. And I mean, year to date, my fund is up. Year to date, the stock market's down. I mean, it's not a huge gap between the two, but that's unusual. That hasn't happened for a
that's
while.
worth bragging about, Larry. That's worth bragging.
It's not bragging. It's just an observation. And I think
right.
I think that gap's going to get bigger.
Yeah.
I think that gap's going to be, but I mean, certainly on a short-term basis, could any of these things get hit? Absolutely. Absolutely.
Yeah.
Get on Twitter and Google Myrmecan. Have you ever seen the Myrmecan chart on the German Deutschmark in gold terms?
Yeah, the volatility
right?
in it. Yeah.
Look at the volatility, right? I mean, I
think that's a really important chart for what's to come here in the next 5 years for people to fully understand.
Exactly.
Yeah.
Exactly. I mean, and that's, to me, that's as you're trying to guide people through this, it's extremely important that you help them understand what they own, why they own it. Like look at the Bitcoiners who pumped it at 17,000 to people who didn't understand what they were buying.
Mm-hmm.
And then it went down. And then they blew it out at 3,500, and guys like me bought it at 3,500.
Yeah.
And I was buying, by the way, I bought it at 17,000 too. But you see, the point is, this is like we're flying an airplane, and conditions are getting really bad, and we're maybe on the borderline of crashing. I mean, the dials are going to start going nuts.
Yeah.
And you're going to, when the dials are going nuts, you got to have your hand on the stick, and you got to understand exactly what you're aiming for. And so. You don't want to get blown out of your sound money assets. You don't want to get blown out of your house. You don't want to get blown out of your Bitcoin. You don't want to get blown out of your silver or your gold. And leverage can do that to you.
Larry, this is my last question for you. So people hearing this can get depressing. This can get people down, right? Yeah. But give people kind of a message of hope, or a message of, if you're on the right side of this, there's large opportunities here for folks. So what
absolutely. I mean, look, I got smashed from 2011 to 2015. I got absolutely smashed because I was long gold and gold stocks. I mean, I watched my net worth, really severely decline. And that was horrible. It was one of the worst things I've ever been through. And yet it was that smash that caused me to realize I was, physically out of shape. And I wanted to be around to fight the battle and win at the end of the game. And so I went crazy on getting into shape. I got into CrossFit and everything else. And so the point I guess I'm trying to make is that, this is going to be tough, but you can view that as bad, or you can view that as an opportunity. You can view it as a chance, and we're all playing for posterity, right? We've only got so much time here. And, some point it'll be near the end game, and the kids will be saying, man, Grandpa did it right. Do you know what I mean? I mean, he, things really sucked. I mean, I'm sure it wasn't fun being 18 years old in 1939, in the United States, and, the Japanese have attacked Pearl Harbor, or, 41, 42, the Japanese have attacked Pearl Harbor, and, the Nazis are rolling through Germany, and, you're fighting age, and you realize this is going to suck. But the flip of that is, you got a chance to, to prove yourself in a very tough environment. And if you come out the other side, you're going to be the greatest generation. I mean, and I do think, there really is brightness on the other side of this. I mean, when we fix this, it's going to be a much better world. It really is. I mean, it's not a bad world. I mean, what we've got is we've got bad leaders and a broken system. And so every generation has the challenge that they've got to endure. And, this group of us living today, and the boomers, look, the boomers are going to suffer later in their life. That's because we've had a pretty cushy life, for the last 30 or 40 years, right? And now we're about to get tested. And it's going to really suck for some boomers if they're not on the right side of this. For young people, arguably, it's an enormous opportunity.
Enormous.
They get on the right side of this, and, I mean, I don't think this is going to last 30 or 40 years. I mean, this is going to get taken. This is going to be over. I mean, if you look at fourth turnings, they're typically 20 to 30 years long. And I think this one started in 2008.
Yeah.
So,
I agree with you there.
Right? So, okay, worst case, it's 2030, 8-ish. So, young people will have a lot of good life post this issue. And I don't think it's going to go that long. I think it's probably going to be over by 2030. That's my opinion. So I have been wrong on timing, though. Things sometimes do take longer than I think. So perhaps it's a bit longer. But, look, it's an opportunity if you view it as an opportunity. And irrespective of how you view it, we don't get to choose the conditions we live in. All we get to choose is how we respond to them. And so, I've always been very much of the Stoic philosophy that, whatever the times throw at us, let them throw them at us. What matters isn't, what matters is, are we doing it right? Are we doing what's honorable? Are we doing what's correct? Are we doing what's ethical? Are we working hard? Are we being the best version of ourselves? I don't know. I don't know. Personally, I don't want a cushy life. Do you know what I mean? I really don't.
I love that. I love that.
Yeah, I don't want to push. I'm into CrossFit. It's like you just push yourself as hard as you possibly can. I want to be the best version of me I can be. Yeah. I don't want a cushy life. I want to be challenged. I think Bitcoiners feel that way too. They want to change the world.
I totally agree with that.
Fix the money, fix the world. And if anyone's listening to this or looking at this, the people who are inclined to listen to this, you have a set of knowledge that most people don't have. And so imagine, fully understanding what's going on and being in a position to help yourself, help other people, help your friends, educate people, change the world for the better. So, there is in my view, even though there could be some very rough stuff that happens, and there'll always be rough stuff happening in the world, there's a way for all of us to feel good about it and to make progress with it. So, and let me just say this, I go to gold shows and the people are depressed because they've been fighting this battle for so long and they're so depressed. I go to Bitcoin things, everyone's fired up. That's what I love about Bitcoin. It's such a sharp spear.
Yeah.
It is definitely, the other side, they're totally screwed.
Yeah.
They are we're going to win. We're going to win big time. And that's going to be fun too. But along the way, is it going to be rough? Yeah, it's going to be rough. There's no doubt.
I love that.
No doubt.
Harness your environment. Don't be a victim of it. I love the message. Larry, thank you so much for making time. We have to do this more often. I need to bring you onto the show more often here because
whatever.
You're just a wealth of knowledge.
Yeah, I enjoy talking to you. It's really a lot of fun. It's off the cuff. I know.
we got to get a high five in next week down in Miami.
Yeah, I'll see you in Miami. It's only a week away, so I'll see you next week.
Awesome. Thank you so much for your time, Larry.
Thank you.
If you guys enjoyed this conversation, be sure to follow the show on whatever podcast application you use. Just search for We Study Billionaires. The Bitcoin specific shows come out every Wednesday, and I'd love to have you as a regular listener. If you enjoyed the show or you learned something new or you found it valuable, if you can leave a review, we would really appreciate that. And it's something that helps others find the interview in the search algorithm. So anything you can do to help out with a review, we would just greatly appreciate. And with that, thanks for listening, and I'll catch you again next week.
Thank you for listening to TIP. To access our show notes, courses, or forums, go to theinvestorspodcast.com. This show is for entertainment purposes only. Before making any decisions, consult a professional. This show is copyrighted by the Investors Podcast Network. Written permissions must be granted before syndication or rebroadcasting.
Thanks for watching. Make sure to subscribe and hit that notification bell so you don't miss out on the next podcast episode and new investing resources.
What are your takeaways and thoughts on this discussion? Let us know in the comments section below.